Hey everyone, we're at FIA EXPO, Futures and Options Expo in Chicago. I'm joined now by Ryan Moroney, who is CEO of CQG. Ryan, thanks for joining me today.
No, thanks for having me. Yeah,
good to see
always
you
good to see you. Yeah.
So I want to jump in and talk shop right away. CQG has just has added access to regtech RV Curve traded on CME Globex to allow the trading of relative value treasury spreads. Interest rates are increasingly expected to remain high, I think you'll agree, which could further strain stock markets. Do you have a horse in this race?
Well, horse in the race. First of all, I'll say the RV spreads from Globex, kind of a kudos to them. Really innovative product. Cool thing to see them come out. We're really happy actually to add them in the product. In terms of like interest rates, I do think they stay higher for longer. I think we're in a way like kind of an uncharted territory here where as they stay up, you're also going to start to see as the cycle goes on, commodity prices are up because cost of productivity is up. You're starting to see corporate earnings actually at a higher level. So, I mean, last couple of weeks, the equity markets come down, I think, reacting to the expectation that rates are probably going to continue to stay high.
Sure.
I don't know that I expect carnage in the equity markets right now. I think there is actually going to be kind of a cycle where you're going to see high rates, you're going to see high prices, and you may even see high earnings. Longer term, that's not super sustainable.
Yeah.
You know, the high rates thing for me is the idea of using rates right now in this economy to basically curb demand to try to bring prices down. The economist in me thinks maybe you take the other approach and we try to focus a bit more on productivity and try to bring that up to solve the supply side of things. I'd like to see that. I think that's the way that things maybe smooth over. From a horse in the race, ultimately we benefit from a healthy economy like anybody else. Our customers look at us a lot for risk management purposes, and I think if the uncertainty of high rates and high prices, I think CQG has a role in this world to do really well on the risk side of things, and so that's kind of what we're focusing on, is doing that side of things well and playing our role in keeping things safe.
Great, awesome. Mobile trading has become a critical aspect of the whole trading technologies sort of apparatus. Can you provide us with some insights into the mobile versus desktop use among professional traders that use CQG today?
Yeah, so if you think of professional traders, from an actual trading perspective, the vast majority of the volume is still on the desktop platform.
Okay.
So about 3% of our volume is mobile, and the remainder is through other things. That said, if you look at usage patterns, so we see really heavy and frequent login of the mobile applications. So I think the way they're being used is more as a monitoring thing. So you can see through the day people are pulling it up, they're looking at data, they're probably looking at their orders, and I think the 3% of the volume that we see is primarily reacting to things, getting out of a trade or whatever it is, more so than a primary trading device. So that's kind of what we're seeing, is we're seeing like heavy login activity, heavy usage, but we don't see heavy trades. And so I think what they're doing is they're using it to monitor the markets more so than like originate trades and originate trading ideas.
But they do have the trading functionality built into the mobile solutions, right?
Yeah.
That's an interesting perspective. I wonder why they would be still using the desktop version to make the actual trading decisions, whether when they're probably analyzing the markets or looking at market data within the mobile solution.
I think the mobile thing is more like frequent check-ins. So they're at their desk, they're trading, they go to lunch, and while they're at lunch, they're checking in to see what are the markets doing, what is my position right now, what do I need to do about it, and they react right there. So it's great that they have it, but then they go back to their desk and they do the rest of their work.
It's sort of instinctive, right? In a way. I mean, we're old school, right? We come from the old school trading ways. So that definitely makes sense. A little bit on regulations. The SEC has shown concerns about potential conflicts of interest arising from the use of predictive analytics by broker-dealers. Do you think that AI regulation is around the corner? Because this really does deal with machine learning and things like that. And what do you think we should expect from the world of AI, sort of, or market participants immersing themselves into the world of AI?
It's hard for me to predict what the regulators are going to do. I think if you look at historically I think it's good if they give clarity one way or the other. I think uncertainty is difficult for any sort of innovation because people don't know where to invest their time. I think people will invest in AI. I think people want to do it in a responsible way, and I think guidance helps. I don't know that regulation necessarily helps, but I think guidance can help in this scenario. I think when you think of a broker-dealer, like the SEC thing and broker-dealer specifically, I think the broker-dealer has some obligations in terms of advice.
Yeah.
And so I think the way that we're thinking about AI right now, like there's an underlying current, which is it's great technology, but whatever you build, you must understand it. So if you get data that goes in and something comes out, and that something that comes out is advice, I think it's important as a broker that you understand what that advice is and why that's the advice that was given. So we've kind of taken like a trust but also verify approach with AI.
I see.
And I think that that's kind of the right way to think about it. In terms of AI as a whole, I think there's going to be incredible innovation in this area. And I think to the degree that people can do it responsibly, where they're not just hoping that something good happens or pulling data in and something comes out and trusting it, but actually take the time to understand what is the decision tree process within your neuron, all that stuff, and understand it and refine it. I think we can offer really, really cool products out there, and I think that's what a lot of this conference has been, actually.
Yeah, and I was going to say that judging by the panels and some of the discussions that took place yesterday, it seems like market participants in the industry more broadly is absorbing a lot of this information, a lot of this new knowledge and know-how to really improve many different processes, both on the trading side, on the data side, but then also on the operations and back office side, and many different things.
I would say probably half of my conversations this week have been somewhat related to AI. People asking what we're doing, we're asking what they're doing, and I've been really, really encouraged by the way people are thinking about it.
Very cool, very cool.
Yeah.
In terms of trading technology integrations, we're always seeing a lot of that in the industry. You and I spoke earlier this year when you guys partnered with Broadridge to offer the single OMS EMS solution. I wanted to find out how have clients reacted to that partnership, and do you have more such partnerships sort of in play as we move forward?
Yeah. So reaction has been great. I think as a whole, working with Broadridge has been incredible. Like as an organization, they've been awesome. The guys there, but kind of good to work with. Market reaction has been great. I think partially for that reason. People trust CQG, and I've learned through this that people really do trust Broadridge as well. And so I think we're getting a really good reaction to the partnership. I think people believe like it's two firms that have a similar view of the world working together. So that's been really good. Partnerships as a whole have been a really important part of CQG for, I would say, since about 2010, when we've really started kind of opening up our infrastructure, and our primary way that we go to market is oftentimes in partnership with somebody else. You know, Broadridge is unique in that we're going after a really interesting, unique market together, but in general, partnerships is an important part of CQG's kind of entire go-to-market strategy. So, all right, more will come.
We'll look for more news in the future. I'm sure there'll be more. Also, earlier this year, when you and I spoke, you said that CQG is going to actively be pursuing the equity options business. Is there any news on that front?
Yeah, we've actually made quite a bit of progress. So we, as I said, we are going down that path. We've kind of built a lot of proof of concept stuff. We have working prototypes of everything working in equity options. Got all the technology done, and we'll probably be going to market with it probably Q1 of next year.
Q1?
Yeah.
That's awesome. I guess to wrap things up, I wanted to get your perspective. What is the single biggest takeaway that you have for this conference's participants this year? I mean, it's day 2. Things are sort of wrapping up this afternoon. Sort of what's your overall impression and your key takeaway for the participants at the Expo?
You know, I think it goes back to your very first question about rates and about the uncertainty and the importance of risk. I really do believe our industry plays a role in keeping the markets calm. You heard kind of Terry today in his speech talking about like the important roles that like market makers play and liquidity plays and all that sort of stuff. I think in general, like everybody here is working towards that problem, which is creating good tools and good technology, investing in artificial intelligence responsibly, so that we can offer solutions that keep the markets calm and uncertainty. And so I always walk away from this just encouraged by the firms in the industry and always, you know, CQG's role in that too. So
yeah, absolutely. And I think FIA and some of these committees that the organization has are also sort of proactively working on a lot of these different things. So it's definitely really cool to watch everybody come together. Whereas maybe in certain other parts of the financial services space, it's not always as easy to collaborate and work together.
That's right.
Well, Ryan, thanks so much for taking the time to speak with us and giving us your insights. Always a pleasure interviewing you.
Always great.
Good luck the rest of the way.
Thank you.
And we'll see you soon.
Sounds good. All right.